What are the catalysts for Bitcoin price to improve? We think, well, nothing's going to happen today, and then 5 minutes before the market closes, a lot of stuff happens like it can literally change in 60 seconds. The macro economy has one set of numbers, and you would think it's good for Bitcoin, but it's bad for Bitcoin. And we can participate, in size a million a day, 100 million a day, a billion a day. We had such an avalanche of demand. We had too much demand, and people want to buy infinite, and we don't want to sell infinite because we'll drive the BTC rating down. We're not looking to do anything that is jarring to the price. We want the price to be stable. The amount of interest in this topic explodes, and when the volatility explodes, the engagement explodes like BlackRock's bringing in the market like we're bringing to the market right from what we see is a once-in-a-lifetime opportunity as the price of Bitcoin continues to crash down almost 16% just in the past. We also saw over $USD 0 liquidated in minutes, with Bitcoin sitting just under $65,000. Today, Michael Saylor discusses his prediction for Bitcoin and what we can expect in the coming months. Saylor says 2026 will mark the beginning of an absolute surge in price for Bitcoin, as well as more all-time highs. And in the coming months, we'll witness one of the biggest price rises so far since the creation of the dominant cryptocurrency. The story has become even bigger in 2024 because of the Bitcoin ETFs, with thousands of institutional investors across the United States now buying Bitcoin. The demand for the leading digital asset has increased exponentially, and Saylor says everything is about to change. If you go back to the crypto winter when we had to recapitalize some toxic debt on our balance sheet, the fundamental catalysts are regulatory support. We have the most constructive set of financial regulators in the history of the industry right now. The head of the Fed, the head of the Treasury, the head of the CFTC, the head of the SEC, and the White House has a digital assets CR, right? Those 5 things are massive bull flags. They're all very positive, and you would expect that something good will come probably out of the CFTC or the SEC, as they are constructive about facilitating financial companies to innovate in the digital asset space, right? I would have been skeptical about that 2 years ago, but I think for you to be skeptical about their support for digital innovation today would be ignoring all the words from everybody in those positions. And I think that the second catalyst will be banking adoption. The formation of the banking credit networks as of the large banks, and as companies like Schwab, they start to allow you to trade Bitcoin, custody Bitcoin, borrow against Bitcoin. They're going to legitimize the asset, and they're going to decrease the volatility of the asset. They're going to improve the usefulness of the asset. You're aware of the announcement of the BlackRock Bitcoin Volatility Income Fund that came about a week ago, where they said they were going to sell volatility or generate income, and a lot of people that speculate that will decrease the volatility of Bitcoin and then put a more stable floor into the asset. So I think the actions by big finance, the actions by the big banks, and the actions by the financial regulators are the fundamentals. The cryptosphere. You would say, I want pro-digital assets regulators. I want pro-digital assets banks, and I want pro-digital assets financial innovations. Fundamentally, the industry is going to move forward because of enlightened regulation, engaged, thoughtful banking, and then innovative finance. And that's what we're doing, and that's what we see right now. We try to be very reactive to market signals. So for example, when our equity trades weak, we don't sell it. When our credit instruments are under par, trading weak, and when the cost of credit is too high, we don't sell them. But the most obvious is SDRC. If it trades below 100, we don't sell it. So in periods where the marketplace loses confidence in our particular credit instruments, we simply wait. And in periods when the MNAV of the equity explodes to 3 or 3.5, we might sell $1 billion a day, right? So when the capital markets are enthusiastic about either the equity or the credit, we react to them. And it's above our pay grade to set financial policy. It's even above our pay grade to interpret the financial policy. Sometimes the macroeconomy has one set of numbers, and you would think it's good for Bitcoin, but it's bad for Bitcoin. Or another time you would say, well, if they do this, that should be good for us, and it's not good for us. And then other times it's the opposite. I think the nice thing about our business is we have the option to do nothing, and we have a set of disciplined capital markets programs. They've moved from being a discrete, where it's we got to do a deal this quarter. What's the deal we're going to do in Q3? If the market thinks, that the cost of capital on an instrument like SDRF should be 11%, well, we just don't want to sell it. So we think it ought to go to 8%. So when the market takes SDRF to 140 or whatever the price it is that we think is fair, then we will be open to issuing more. And when the market is as bearish on those instruments, we don't. And the good thing about the business is if you think Bitcoin is going to grow, fill in a number 30% a year, then our option is just do nothing. And we're a company that's a $45, $50, $50 billion company growing 30% a year. So that's our default. Our default. If you think Bitcoin's only going to grow 10 or 20% a year, our default is we just do nothing and we grow at the rate of Bitcoin. And we're okay with that. And then if we think that there's something very accretive that's going to be good for the shareholders, then we will participate. And the truth is we can't control how the markets will interpret all these things. What we can do is set up a rational set of credit structures so that we only issue credit when we think it's in the best interest of the company, and we only issue equity when it's in the best interest of the company. Confidently predicts that explosive growth is looming on the horizon, embracing an unyielding enthusiasm for the Bitcoin realm as BlackRock and many other crypto giants are doing just that. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Saylor asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment with a giant spotlight on Bitcoin ETFs. Saylor highlights this being a significant development in the financial ecosystem. Saylor reassures that a long-expected surge awaits. If you take on debt you can't pay back, right? Then that doesn't help the company. That hurts the company. But if you're good at digital credit, that could be another case. A third would be anything that uses capital, right? So if these companies, if they want to generate Bitcoin yield, they're going to have to find some way to generate a benefit from the capital, right? You could support a trading or derivatives trading by posting it as collateral. You can engage in derivatives trading, right? You could literally become a public company with a lot of capital that trades in the digital derivatives market, posting your Bitcoin as the collateral to take the trade and sell the volatility. It's a different business model. What do I think? I think there's thousands of companies that get launched. Many don't succeed. Some will fail. Some get launched doing one thing, and then they evolve into something different. Like look at our company. We evolved, In fact, you could argue that the most successful companies evolve through 2, 3, 4 stages in their life cycle. I mean, Apple didn't start out as a phone company for sure. So, I think that the winners will evolve and they'll find a niche. And I think that the ones that don't evolve, if you're just a holding company holding Bitcoin, not doing anything with it, might you get bought up? Yeah, you might get bought. And would that be good for you? You're a lot better off, If you have something people want to buy, you're going to see all sorts of examples. Now, presumably thousands and thousands of companies get launched, and they all do different things, and we're very embryonic early on in the first year, 2 years, 50 years from now, right? I mean, the debate will be who's the best Bitcoin-backed insurance company, right? But 20, 30, 40 years from now, and that company doesn't even exist right now. But on the other hand, what about us? Are they opportunities for us? Well, they were an opportunity for Strive. Strive did the deal with Similar, and they closed it quickly, and they were able to build their capital base pretty rapidly. So that's, we see examples of that. There probably will be some mergers and acquisitions of other companies in various space if they put together their various assets in a synergistic way. Our business is laser-like, monomaniacally focused on one thing right now. We want to make Stretch SDRC the premier credit instrument in the digital world. The best digital credit in the world, and maybe the best credit in the world. So you have to be thinking about that. And then anything we might do that looks complicated or risky or different would intro anything that introduces a question in the mind of the Stretch investor. Can we pay the dividend that's going to be deemed negative? Anything that introduces a question in the equity investor's mind. Can you outperform Bitcoin? There are other companies and other investors for which it's a great opportunity for them, and they can make a lot of money. And they will pursue it, and God bless them. After 20 capital markets transactions and all sorts of credit instruments, we think we found the best one for us and for the credit investor, and we think we found a great business model, right? The treasury company. If you can generate return of capital dividends scalably and scale up the issuance of treasury credit, you've got maybe one of the most efficient business models in the world and one of the most compelling products in the world. So we don't want to do anything that would dilute that focus, undermine the credit of the balance sheet, or distract the management team. Like if hypothetically someone said, I want to buy $100 billion of SDRC tomorrow. You can see how we don't want to sell it, right? Because then that's reflexive, and that would undermine the credit quality, and that would increase the volatility, and that kind of works against everything. So luckily for us, and practically that's not going to happen, right? Like they say, it's good that we have time because otherwise everything would take place at the same time, right? All at once. We don't want stuff to happen all at once. So, it will happen progressively. We'll be very thoughtful about it. Our goal is always for it to be extremely compelling to attract capital. And at the point where we feel like we've got too much capital, it would be a circumstance where there was massive success of SDRC and Bitcoin was lagging, and an MSTR equity premium was lagging, and there's that weird situation where it's hard for the company to increase its collateral base in order to back the credit, and then we would say we have too much demand for the credit, so we need to click it down. But if there's over demand for the credit, it would still be pegged at 100 when we take it down 25 basis points. And so, in all likelihood, it's going to be excessively compelling in terms of dividend rate for quite a while, because even though you believe in Bitcoin as collateral, and I believe in Bitcoin as collateral, we've got a lot of work to do with credit rating agencies and the Basel rules and traditional finance establishment. Saylor challenges the conventional economic metrics, asserting that these metrics are often manipulated to paint a specific narrative selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative detached from the manipulations of the conventional economic sphere. Saylor also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions.